Okay, guys, we're going to take a look at Bitcoin today. So this is Bitcoin paired up with the USDT on the 1 hour Binance chart. As I get into this, if you do find it useful and informative, smash the like button. Otherwise, let's crack right onto it. So we have had a pretty interesting kind of run for BTC, right? We pushed up into the higher fifth wave movement. We did that on Friday. We start to consolidate down. Interesting kind of break from there. And then, of course, we push back down again in another 5-wave drop. So all in all, a very corrective kind of ranging market. And during this entire time, as you can see from the stochastic RSI, it's just been bouncing around, right? Just between the low range and the high range, not really terribly doing too much. Now, you might be thinking, well, this is a bit of like a nothing burger, it's a bit boring, etc. But actually, this is part of a bigger setup. I think there's something bigger coming in the coming hours, days or whatever, right? I do see us moving up for BTC and dragging the rest of the altcoin market with it, right? So I'm looking at the market and thinking to myself, it's actually probably, even though like there's blood in the streets, people are panicking, probably about time to probably some long positions. So that's kind of where my mind is at right now. It's kind of what I was just in the trading session in the Discord server with our Discord members, saying that actually the market is probably gearing up for long positions rather than short positions, because the short positions should have been done last week, which we were talking about, well, last week, funny enough. Anyway, for BTC here, one of the things that I'm really kind of interested in is how we've had this 5-wave drop to the downside right now, targeting out the 200 hourly EMA here. I'm not convinced that there's actually terribly too much more to the downside to be seen before we at least get a relief rally. So the bearish case is a relief rally and further decline, right? And that would basically look to lose the 200 EMA on the hourly chart and probably go down to like 113, maybe even 112 in terms of thousands of dollars, right? But the kind of bull case here is actually that we're actually completing out what would be known as an irregular flat correction. Now, an irregular flat correction is quite an interesting structure. It basically implies that you are in the kind of ranging market with a slight push into higher highs at times and a slight push into lower lows at times, a bit like a megaphone pattern, right? And you can see it barely here. Basically, you have these kind of lower lows going on, and you do have a higher low over here from Monday at 6 a.m. UTC, right? So in that particular case, we'd actually be thinking, okay, another break to the upside. But, you know, it can't always take everything at face value. So let's go ahead and take a look at the relative strength index. Now, the relative strength index does actually show some bullish divergence. It was before we started to see this move to the downside, okay? And at the moment, what we also see is some strength. Okay, we do have lower lows on our price action, but we have a higher low from our relative strength index. So that tells us that actually things here are gearing up more bullishly than bearishly on this 1 hour time frame. So take that with a pinch of salt as, okay, well, if we are so doomed, why are we seeing actually weakness within the moves to the downside? So we have to take that. The other thing to look at is the MACD histogram. Now, the MACD histogram here shows no divergences to be noted. Basically, we have an increase in this volume as we sold off here, and we have an increase in the volume to the upside as we have a higher high. So there's no divergence noted between how the volumes are behaving against kind of the candlesticks. So that's also a neutral kind of position to be in, right? So we have the relative strength index in a bearish position, but flashing us some bullish divergences. We have a MACD that's not really decisive, it's neutral, and we have a stochastic RSI that's giving us bullish vibes too. So all in all, everything from the kind of momentum oscillators are telling us that things might not be as bad as they maybe first seem. Now, from a kind of smart money concepts point of view, you can see down here towards that 200 EMA, all these pockets of green. Well, these dark green boxes are basically kind of where a lot of buyers have stepped in historically. So if price comes down here and those buyers remain within these kind of ranges, well, that could be an interesting area for a significant bounce. The light box down here, the light green box, is of course your fair value gap. Now, they can of course be filled out, so we want to be a little bit mindful over those. But all in all, I'm not seeing anything of note to kind of be overly too concerned with. We are in a bullish structure still on this hourly time frame, regardless of all of this chop that's going on at the moment. Okay, let's go ahead and just get off of smart money concepts and roll this up into a daily time frame, because the daily time frame kind of cuts through a lot of that noise, right? Now, what do we see here? Well, we can see a good run to the upside, and it looks like it has the potential to have finished. I'm not saying that it has, but it has the potential that it has finished. I still think there's another higher high to be had. I could be wrong because this is not the best looking candle if we were to kind of reflect on that at the moment. A bit of a hammer, if you will. So we want to kind of keep this in mind that this is not the most bullish kind of candlestick to see. Now, there's no bullish or bearish kind of engulfing candles, anything like that, but we do want to be aware that that wick there that we see for today's daily candle, not the best. So we want to keep that in mind. Now, from our oscillator, we are overbought. So we are looking for a correction, but I just don't think that correction is coming right away. I think a higher high and then a drop. And that next drop, I think, is going to happen to pull us quite decently down, probably lower than 111, maybe even drop into 110. And if we can't hold the 110 area, then I do think we're going to be revisiting the lower levels too. Okay, but that's not to say that we have to go down lower than the 107,000 that we were at before. So there's a little bit of momentum shifting, right? But I just don't think it's going to happen right away. And our relative strength index, which is not as sensitive to the price action, is indicating that we're in bullish territory and have plenty of room for growth. But devil's advocate, it can go the other way too, because, well, as much room as it got to the upside, it does also have the same kind of room, if not more, to the downside. So again, it's kind of like a neutral position. It's kind of hovering above 55, but with this particular oscillator, anything above 50 is usually considered bullish and anything lower than 50 is considered bearish. So we're in bullish territory with, you know, the potential to continue going up into a higher high, but it could also fall back down based on, you know, stochastic variations of this exact oscillator. So take it all with a pinch of salt so far. Now, the MACD histogram shows us some interesting bullish divergences, okay, at least against what we were currently looking at. So basically what we've got kind of going on here is the idea of a higher volume on this oscillator, but actually it's a lower high. So it's actually showing us that we have lower highs on our price action, right? But we actually have a higher volume here. Now, the opposite is true. So that was actually a few days ago as we pushed up into a new higher high. And since getting this higher high, we actually have decreased volume, okay, on the MACD histogram, that is. So a higher high plus lower highs on this indicates bearish divergence. So the daily chart, I think, has more potential for a higher high, but it's short term, and we should be thinking that a correction is coming, and we don't want to kid ourselves into thinking this thing can just go straight up to the moon. So we need to kind of stay grounded here. Small time frames, the 1 hour, the 4 hour time frame, they tell us that there's price action for Bitcoin has the potential to go higher, right? We're talking about piercing $116,000, right? Going higher than the previous high, which was 116,773. Or 75, sorry. I would expect us to go higher, and I'll be looking at piercing the previous kind of area that I've marked on here, and probably even pushing a little ahead of 117,000. After that is complete though, the gloves come off, and the macro timeframes are telling us that we want to be thinking that there's a correction coming, and we could potentially take advantage of that. So we could be thinking short positions from around $117,000, give ourselves a good stop loss there, and target out probably around the 110. Okay, we'll look for a 1.5 risk reward ratio or more. So I would look to lift up that stop loss into a reasonable area where I would accept the kind of risks that are associated with it, somewhere like 122,000, for example. So in this particular example, which is all it is, it's just my thoughts kind of out loud here, would be to enter a short position at $117,551 approximately, right? And I'd put my stop loss at about $122,014, right? Or $122,014. And then my take profit would be around $110,865, giving me a 1.5 risk reward ratio. This is where my mind is at. Now, we could potentially go long into that if we wanted to, right? And put the stop loss, I don't know, reasonably, at least at a reasonable area lower than maybe the 50 EMA. And of course, it would be a short-term movement, something that we would do on the smaller timeframes and just take the liquidity as we could find it. But ultimately, the bigger plays on the larger time frame, such as shorting the market from around $117,000 to about $110,000. This, I think, is kind of where the market is hinting at a nice, healthy correction ahead of the next big run into new all-time highs, because I do believe that new all-time highs are on the horizon for BTC, and I'm still targeting out these ranges between 140,000 and potentially out towards probably 10, yeah, I'd say 148,000. Yeah, I'll go on the record, say 148. So I'm looking between 140 and $148,000 to kind of keep in line with our kind of expectations across the years. So if I bring this out into view, you can kind of see what the expectations are across the years with this curved trend line. If we were to connect all of these different peaks together, you kind of project out where the next touch point is going to be. And I'm going to have that somewhere between 140 and $148,000. So for Bitcoin, those are my expectations. Expect a little push higher on the smaller timeframes over the next day or so. But ultimately, we want to be thinking that a nice, healthy, normal correction for Bitcoin is on the table. And I think we could be looking at $110,000. You can let me know your thoughts in the comments down below or join us in the Discord and we can continue the conversation down there.